Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Friday, December 2nd, 2016. Well, here's a look at the ES front month futures contract. We don't usually do these previews for Friday, but I thought this one was today was notable enough that we should at least have a chat coming into Friday real quick here. So here's the ES. It closed the broad market futures on the S&P 500. It closed below the 10-day moving average for the first time since back in very early November, about 4 or 5 days before the election, and so it's the first sign of a break there. Now, that's not a big deal. Let's go through the major indices and see where the real story is. So first of all, crude oil, big day, up about 4 points to 51. Another nice, almost high close. Looks like a breakout potentially in crude oil. Obviously driven by OPEC saying they're going to cut supply, and so look for that. That'll obviously be a little bit of a slowdown for the economy if it goes too far, but we got lots of time to find out. Here goes gold, up $2.70. New closing low since last February on gold. Okay, so here's what matters. Here's the S&P cash index, down almost 8 points. No big deal. You say no big deal, right? I mean, what could that matter? 8 points on the S&P. And keep in mind, let's look at Goldman Sachs. Goldman Sachs up again today. Goldman Sachs has now gone another 14 points in 2 days on this Deutsche Bank upgrade, right? Goldman's a big piece of the Dow. It's in the S&P. So it weights heavily on those two things. Now, we all know the Dow. We talk about this all the time. Just 30 stocks. Who cares? Anybody that follows the Dow is not a professional trader. So here's the Dow Jones Industrial Average. Got the 13 buy signal back about 4 days before the election. Election happens. It shoots up. And now it's being carried by Goldman all by itself. I put you up a list of the Dow 30 stocks. Goldman's the one that's making this happen, right? But what's happening in the rest of the market? So the S&P 500, the broader index, down 7. That's not the end of the world. That's not a big deal, But there's some energy stocks and whatnot benefiting from oil moving up. So keep that in mind. Here's the other story, though. This is the Nasdaq 100, down 76 points on Thursday after being down on Wednesday. Okay, really scary. There's also a head and shoulders formation. I don't have my drawing tool set up here on this particular chart, but there is a head and shoulders formation on this pattern forming, and the crack would be, obviously if we shoot under that range, it's about 46.50. The two lows that you see there, those are the two armpits of the head and shoulder. We crack that, and there's not a lot of support all the way. Well, there's a little bit of support, obviously, at 45.75 or so. And then after that, you start looking at those gap fills down around 4,200, or so, and you hope you hold there. So this is ominous, I think, from that perspective. And the fact that they're doing this once again with with the Dow up is just kind of funny. 30 stocks, you got 2 of them holding everything up. Here's the SOX down 42. Here's a big one. This is the semiconductor index. There goes your electronics industry right there. 42 points on the SOX, heading back towards that red static trend line at least. Biotechs, we talked about this last night. Remember, they were the ones that gapped up the day after the election and were strong for a couple of days. Now they've rolled over back into filling the gap, everything heading back down. Okay, so let's look at the VIX, which only gained 74 cents. That's not a lot when you realize the carnage that was out there on some of these bigger stocks. We'll look at some of them here in a moment. Trend closes at 0.67. Now remember, I told you a big number was going to drop off. If you count the last 10 dots here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yes, that big number up near 2, basically, that's the post-election day number, right? That has dropped off the 10-day moving average, and we replaced it with a 0.67. So that's why the 10-day moving average drops. Remember, the one thing that we never saw here was we got the trend 10-day moving average dipped under 0.85 right before the election. It was right there at the time, right? And then the market's got a little bit extra money, and when the bond market tanked, and we never got the sell-off that we were expecting. But this number can get back under 0.85 again fairly quickly, and look out if that happens. NASDAQ volume back up. So each day here, as we started to roll over on Wednesday, remember Monday was really bad. Tuesday, a little bit of volume pickup. Wednesday, more volume, back to a more normal level, 1.8 billion, which is what we like to see on the NASDAQ. And we started to get some downside movement going here. The breadth of the market was falling apart. Stocks started to accelerate. We had AVGO and a lot of stocks make us a few points to the downside. And then here we are on Thursday, over 2 billion shares traded, and everything just melting down across the board. So it was it's a big difference here, and now the volume has picked up. Advanced decline ratio, negative 753 on the NASDAQ. I mean, 753 more stocks down than up. Funny, that doesn't look as bad as Wednesday, does it? But it's still pretty bad. On the New York, it was negative 747. Google loses $11.55. That's the second worst closing low since the election. Apple loses $1, down $1. Amazon down $6.92. Netflix gains 22 cents, which is one of the few tech stocks that was actually up on the session. That's after dipping lower intraday, by the way. Tesla down 7.52. I tried to short this morning, just missed it. It was a little too quick on me. Here's the other major story. So this is the thing that's interesting. We've got a kind of a major, like a hidden stealth kind of breakdown here. All these big name stocks are really coming in here, and the secondary indices like the stocks and the biotechs are getting hit. Everything's coming down hard. I mean, there's still a lot of room. Trust me, this is just the beginning if there's going to be a big rollover. But what's interesting is usually when the bonds are down, money coming out of bonds means a little bit of money lands in the stock market. So, one of the things we saw was if you look at the TLT, which is the 20-year bond ETF, okay, this is interesting. This is the one that gapped down and then sold off sharply for 3 days after the election. And what happened was, as that happened, all the money, the extra money that gets raised from doing that comes out of bonds, and some of it goes into stocks. So that helps the stock market for a few days. And of course, all the people that think everything's great because of Trump and all that, those people are buying into the market at the time. So now, as we start to see the bottoming out of bonds, we kind of expect that to kind of cause the market to pause and maybe start to roll over. Reality sets in. Here's the 13 buy signal here. We bounced for 2 days. Monday and Tuesday. Wednesday, we gapped down, but we held. We didn't sell off really, so there was no new money being raised. But here's the thing that's amazing. The broad market's selling off today, and yet bonds are down again. This is a new low. Look at that candle, a new low. And what's amazing from a technical perspective is when we got the 13 buy signal on it, the risk line that goes with that is at $118.71. The close today, guess where it was? $118.73. Unbelievable, those technicals. So this is the make or break point on bonds. And what's scary about this is if it in fact breaks lower, it should actually accelerate. When you break a risk line that quickly after a 13 sell signal, it could lead to a major, I mean, it's already a bad enough tankage. It's one of the fastest pull-offs in bonds in a long time. But if you were to really break this now, I mean, it could really plummet, and that would be bad for interest rates, bad for everything else. It might hold the stock market up a bit if enough money came out of bonds, because it has to land somewhere for a little bit, but it is not a positive for the net economy. And the fact that it's even possibly doing this is just should be really worrisome to people. So you got bonds at new lows with the market doing a stealth sell-off hidden by the Dow. It's really interesting. I think everybody should be playing the short side. Whenever you get short setups and they're good, try to give them as much room as possible. When you've got long setups, you only take them when you have market directional support. That's very important. Like we had 1 or 2 trades today that were long side setups. But the minute that market rolls, you got to be out of those more than usual and focus on the short side. We've made a killing in the last couple of days on the short side, and really, this is not that much yet. I mean, let's talk about what happens. Like I said, if the NASDAQ cracks that neckline of the Head and Shoulders there at about 46.50, 46.40, and then things really start to accelerate, that's where things are going to get real interesting if it happens. If it happens. We always say if it happens, just in case. Here's a look at the ES front month futures contract. This is the 5-minute chart intraday. Open flat. This one just kind of drifted lower. It was selling off late and bounced in the last 10 minutes or so to come back part way. And then the NASDAQ side, this is to show you the sell-off here. This is actually double average daily range. And really what's key here, this is basically was almost at 4,900 on Tuesday and the low at 47.20 almost late in the day today. So almost 200 points off the NASDAQ in 2 days of trading, essentially. And again, that's not that much compared to what those charts are starting to show us. So real interesting times, good time for us as traders to make money. Not great long-term for people who are holding stocks in the market, but that's not us. Charts as usual brought to you by eSignal 12. If you've not yet taken the trial of our services, now would be a darn good time to do so. Have a great trading Friday and a great weekend. We'll talk about this again over the weekend.